Will the weakness in US dollar hold on the back of the disappointing jobs report? Hello traders, Fawad here, market analyst with FOREX.com. So the US jobs report came out much weaker than expected today at 57,000, and that caused the US dollar to take a tumble. The dollar index here, as you can see, has now fallen to retest the previous resistance area around 130 to 165 zone, where we also have the 21-day exponential moving average. So there's a potential for a rebound here, and if we do see one, then the next upside target from there could be the previous lows around 101.04 area, and with further resistance coming in around yesterday's low. But should the dollar reclaim these levels and go on to climb back above today's earlier high of 101.40-ish, not necessarily today, but in the coming days, then that would be a strong bullish technical signal. With the US bank holiday coming up on Friday, this might be the perfect opportunity for the Japanese authorities to intervene in the FX markets, particularly after the weaker than expected jobs report from the US weighing on the US dollar across the board. Now, the Japanese authorities were presumably already intervening in the markets before the data was released over here. The dollar yen took a big tumble earlier today before stabilizing, and then it resumed lower on the back of the disappointing jobs report. But now it's coming up to test key support around the 160.50 to 160.70 zone, which was previously resistance, and it could now turn into support. But in the event that the dollar yen breaks through this area, then that could tip the balance in the bear's favor, particularly if there's more intervention from Japan, or we see further weakness or widespread weakness for the US dollar because of further weakness in economic data or otherwise. Meanwhile, resistance is now this level right here at 161.50-ish to around 161.95. The zone was previously resistance. As you can see, we broke through it, didn't hold there on the retest. So if the dollar yen rebounds here, this area could turn into resistance. Now the 161.95 level was also the high from July of 2024 as well. So the fact that it's failing to hold above that zone could be significant. But let's see if things will turn back bullish for this currency pair heading deeper into the US session and in the days ahead. Thanks to the weakness in US dollar, we've seen the price of gold rise today, extending its rebound from the day before. It has held above that 4,000 level on a daily closing basis for several days. So this is a potentially bullish signal, but I need to see more bullish price action to confirm that the low is in. For now, I'm treating this as a counter trend move because the underlying trend has been bearish, hasn't it, on gold, as you can see on this daily time frame. Key resistance is at around 4,135, the low from this particular candle where the previous sell-off started. So that level is being tested at the time of this recording. Should we go above it, that would be a bullish scenario from a technical point of view, especially if gold goes on to take out the resistance trend as well. But if we were to see a reversal from here and we go back around the opening levels, then that would put the bears back in control of price action. But for me, gold now needs to really close below the 4,000 level to trigger fresh technical selling in the days and weeks to come. And if that condition is met, then I will resume my bearish view on this market. For now, I'm neutral on gold. Thanks for watching. Don't forget to like this video and subscribe to the YouTube channel. I'll see you in the next update. Take care.